Here's a summary of Shopify's Q2 2026 earnings call, presented in a clear and concise manner for reading aloud. Introduction and key financial highlights. Good morning, everyone, and thank you for joining Shopify's second quarter 2026 conference call. Today, we're discussing an exceptional quarter for Shopify. Our gross merchandise volume, GMV, saw impressive growth, increasing by 32% to $116 billion. This growth was broad-based, spanning across our merchant sizes, geographies, and sales channels. Our revenue also demonstrated strong performance, rising by 34% to $3.6 billion. A significant achievement this quarter is our free cash flow margin, which stood at a healthy 18%. This marks our fifth consecutive quarter with GMV growth exceeding 30%, highlighting the sustained momentum of our business. CEO's key statements. Harley Finkelstein, President Harley Finkelstein, our president, elaborated on the story behind these strong numbers, emphasizing Shopify's foundational operating principle. Shopify creates what most merchants need most of the time. And for everything else, we empower our incredible ecosystem of partners. He highlighted three critical factors driving this durable growth. 1. Expanding addressable market. Shopify now serves merchants of all sizes due to simplified onboarding and a broader range of capabilities. 2. Expanding merchant needs. Merchants require access to new commerce surface areas, best-in-class tools for rapid change, and a unified platform, all of which Shopify provides. 3. Agentic era and ecosystem. Our open ecosystem model is uniquely suited to the current agentic era. We build core primitives and allow partners like OpenAI, Google, Meta, and Microsoft, along with thousands of developers, to build on top, creating countless new front doors for commerce. Key product innovations driving this future include Catalog. This is described as the authoritative source of truth for AI product discovery, structuring over 1 billion products for agents. Catalog is showing twice the conversion rate of AI searches powered by scraped data, ensuring products are presented accurately and with the right context. Universal Commerce Protocol, UCP. This unified protocol is gaining widespread adoption across the industry, enabling agents and builders to access product data, create carts, and check out seamlessly through Shopify. Sidekick, our AI assistant, Sidekick, is seeing significant adoption. Daily active merchants using Sidekick are up 3.6x year-on-year, handling millions of conversations and enabling the creation of thousands of custom apps. Sidekick's value evolves with merchant growth, shifting from store setup to analytics and reporting. Harley also noted key market structural changes benefiting Shopify. AI benefiting smaller brands. AI search is disproportionately helping the long tail of commerce, with 75% of AI-attributed orders in Q2 coming from outside Shopify's top 100 categories. AI agents' ability to understand specific intent rather than just keywords is driving better conversions for specialized products. Checkout's growing value. In a fragmented commerce environment, a best-in-class checkout that sits underneath any experience becomes exponentially more valuable. Shopify's checkout handles immense complexity, making it a critical component. Trust and identity. The Shop app and Shop Pay are crucial for building trust and identity in agentic transactions, with Shop app native GMV growing over 70% and Shop Pay surpassing $400 billion in lifetime accelerated GMV. Key highlights from the business. International growth. International GMV grew 37%, with new local payment offerings in Mexico and expansion of managed markets. Offline commerce. Shopify point-of-sale GMV grew 32%, with deepening unified commerce capabilities, attracting large, complex retailers like Holt Renfrew. B2B expansion. Native B2B capabilities have expanded beyond Plus, allowing more merchants to manage wholesale and DTC from a single admin enterprise brands. Major brands like Guess, Fred Segal, Aritzia, and Avon are choosing Shopify, with ELF Cosmetics, Claire's, Burton, and Sue's now live on the platform. The trend of unified commerce is evident, with Arhaus expanding from online to offline, B2B, and Shopify payments. Harley concluded by reinforcing that once merchants come to Shopify, they stay, driven by the platform's ability to absorb complexity and allow merchants to focus on their products and customers. CFO's key statements. Jeff Hoffmeister, our CFO, provided a detailed look at the financial results and outlook. He reiterated the strong, broad-based growth observed across GMV, revenue, gross profit, operating income, and free cash flow, all exceeding 30%. Key financial points from Jeff. GMV drivers. Growth was broad-based across merchant sizes, with the $25 million-plus band being the fastest growing. Regional growth was strong, with Europe up 34% and North America up 28%. Offline GMV grew 32%, and B2B GMV saw a significant 76% increase. Revenue breakdown. Merchant Solutions revenue grew 37%, driven by GMV and increased payments penetration, which reached 68% globally. Shopify Payments launched in the UAE, and dynamic surfacing of payment methods is improving conversion. ShopPay GMV grew 53%. Subscription Solutions revenue grew 22%, primarily from monthly subscriptions for standard plans and strong net adds. Plus subscriptions and variable platform fees also contributed, driven by higher GMV. Profitability. Merchant Solutions gross profit grew 39%, with margins improving due to higher margin revenue streams and international payment methods. Subscription Solutions gross profit grew 19%, with margins just under 80%. AI costs for Sidekick are included here, and margins have been managed effectively. Operating expenses were 34% of revenue, a nearly 4-point improvement year-over-year, reflecting strong leverage in headcount, sales and marketing, R&D, and G&A. Free cash flow. Q2 free cash flow margin exceeded outlook at just over 18%, with margin expansion driven by operating leverage. Outlook for Q3 2026. Revenue growth, expected in the low 30s year-over-year, with consistent drivers from Q2. No significant FX impact is anticipated. Gross profit growth, expected in the mid to high 20s, with the differential to revenue growth driven by the mix shift between merchant and subscription solutions and continued strength in payments. Operating expenses, expected to be 33% to 34% of revenue, reflecting continued leverage and improvement from the prior year. Free cash flow margin, expected in the high teens to low 20s. Jeff emphasized that Shopify continues to capture a disproportionate share of incremental e-commerce dollars, and the opportunity remains massive both in the US and globally. Significant risk factors. While the transcript focuses heavily on positive performance and future opportunities, the following can be inferred as potential risk areas, though not explicitly detailed as such. Reliance on ecosystem partners. The success of Shopify's agentic strategy is tied to the innovation and adoption of large technology partners like OpenAI, Google, and Meta. AI adoption and cost management. While AI is a significant growth driver, managing the costs associated with advanced AI capabilities and ensuring efficient model usage remains crucial. Competition. The e-commerce landscape is highly competitive, and Shopify must continue to innovate and adapt to maintain its leadership position. Macroeconomic conditions. Broad economic downturns or shifts in consumer spending could impact merchant success and, consequently, Shopify's growth. Regulatory landscape. Changes in data privacy regulations, or other e-commerce related laws could impact operations. Highlights: exceptional Q2 performance with over 30% growth in GMV, revenue, gross profit, operating income, and free cash flow for the fifth consecutive quarter. Strong adoption and impact of new AI-powered products like Catalog and Sidekick, driving higher conversion rates and merchant success. Broad-based growth across all merchant segments, geographies, and sales channels. Significant traction in enterprise and large brand adoption, indicating a strong final migration trend to Shopify. Continued expansion and success in international markets, offline commerce, and B2B solutions. Robust financial health with strong free cash flow generation and improving operating leverage. Lowlights: the transcript is overwhelmingly positive, with no explicit lowlights or challenges mentioned. However, it's important to acknowledge that the pace of AI development, while an opportunity, also represents a constant need for adaptation and investment. The reliance on external partners for AI advancements could also be seen as an indirect risk if those partners shift their strategies. Important statements from CEO and CFO Harley Finkelstein. Shopify creates what most merchants need most of the time. And for everything else, we empower our incredible ecosystem of partners. Reiterates core strategy and ecosystem reliance. Shopify becomes an even more critical partner because we provide consistent and reliable infrastructure that makes every shopping experience feel seamless. Now, whether commerce is handled by humans or agents, whether stores are built by people or AI, Shopify runs underneath it all. Emphasizes Shopify's foundational role in the evolving commerce landscape. Jeff Hoffmeister. Our cohorts continue to outperform, while older ones keep growing. That strength compounds over time as our older cohorts generate multiples of their first-year GMV. Highlights the powerful, compounding nature of Shopify's merchant model. We expect Q3 revenue growth in the low 30s year-over-year. Provides clear forward-looking guidance. In summary, Shopify delivered a stellar Q2 2026, driven by robust GMV and revenue growth, strong AI-powered product innovation, and a clear strategic vision for the future of commerce. The company's commitment to empowering merchants, leveraging its ecosystem, and maintaining financial discipline positions it well for continued success.